14th statement of cash flows is just about cash inflow and outflow. Okay, this last statement here really uses all the prior three statements information. We're not creating new information. What we're trying to do in this entire statement is understand cash balance. Remember, cash appears under the balance sheet, right? Cash account is the first thing you see on a balance sheet. Asset section, first account is always cash. And we want to compare, let's say this year's cash balance, if it's $10,000, assuming last year is, say, $5,000. So $10,000 compared to $5,000, this year we had a whole lot more cash, additional $5,000 balance compared to last year, and we want to know why. Okay, so this statement is all about why is there additional cash compared to last year, and in detail, where does it come from? Does it come from selling more items to customer? Does it come from borrowing money from a creditor? Does it come from issuing stock to the market? So this entire statement is a detailed list of where cash has been going in and out from the business or to the business. Okay, so the purpose here is to understand cash balance, why is it different from last year, and in detail which specific category that we used a lot more cash than others, or specific category we received a lot more cash from others. Okay, so we will separate these into operating activities, investing, financing activities. So pretty much summed up what this purpose of statement of cash flow is about. Comparative balance sheet basically just means 2 years of balance sheet. If we compare together, putting it next to each other, that's what we call comparative balance sheet. Just 2 years of balance sheet listed together side by side. We want to know why is there a difference balance in cash. So where did the additional cash come from? Or where did we lose a lot of cash in this year? So the entire statement is summarizing cash payments and receipts. Now for this entire cash flow statement, in the first section, operating section, we would move backwards from net income and try to reach the cash balance and cash from operating activities. Okay. Later on we'll talk about why we're actually looking for net income, but basically it goes back to the accrual accounting concept. Okay, so net income you see in income statement, earlier we were talking about $63,000 net income. That net income may not necessarily be cash increase $63,000. Remember that companies can sometimes make sales on account. So what does that on account mean? Sales on account refers to money that you're receiving later, right? If it's paying the purchase items on account, that refers to the money that you are paying later. But sales on account, we put in sale revenue under income statement. So let's say we have cash sales today, $500. I received cash. Sales revenue represents the cash part of that receipt. But if I also make sales on account, $500, that part I haven't actually collected cash from customer. From that income, we want to tease out the part that really doesn't belong to cash, and then figure out what is the total amount of cash inflow and outflow. The idea of on account, the idea of on account basically doesn't represent cash yet. So making sales on account is $500, we haven't actually received cash, we don't report it under statement of cash flows. We're purchasing assets on account, creating accounts payable, purchasing inventory, we haven't actually paid the cash, we don't report that under statement of cash flows. Okay, so net income dollar amount sometimes includes some of the revenues that really isn't cash yet. But also reports some of the expenses that we actually haven't paid out. We want to pull them out. Because statement of cash flow is just purely about cash inflow and outflow, not about the stuff that we report as on account. Either a payment that we haven't made or a cash collection that we haven't got from customer. Those parts we will exclude. Okay, so that's why here you see the communication link between accrual basis income and cash reported on balance sheet. So accrual basis, we will ask you to accountants basically record all the revenue whenever it's earned, but sometimes it's not yet cash. We would also record all the expenses, even though we haven't paid it out. Record it as, remember, like accounts payable, salary payable. Those are the things that recur future cash payment. So we want to tease them out So report all the things that only belongs to cash inflow outflow under statement of cash flows. Okay, so this part here, I'm just going to show you a comparative balance sheet. Looks like this, just side to side, 2 years of information, and we want to know why is there a decrease in cash balance $20,000 in detail. So under statement of cash flow, you would see overall a cash difference $20,000 and a whole list of why is there the $20,000 differences. Where does it come from? Okay, so basically the purpose here, we want to use statement of cash flow information. This will help definitely investors, creditors to predict next year's cash flows. So oftentimes the company didn't do a major investment this year, while some of the segments of the business, oftentimes cash flow, the range will be similar to what happened this year. Okay, so they can also evaluate management decisions, understand whether they have used too much cash in certain areas or too less in certain areas. Okay, to predict the ability to pay debts and dividends. If I'm the creditor and I borrow money to this company, definitely I would have all the interest in understanding whether the company will be able to pay me back money. Right, so by looking at a cash flow statement, you can understand whether the company has enough cash balance or not. And if I'm the shareholder, I'm also interested in whether the company is able to pay me dividends. So this is also some of the things that we want to understand from statement of cash flows. All right, now the 3 sections that we'll be going over in statement of cash flows breaks down to, the first one is operating activities. You just have to know a basic understanding of what operating activities is about. Anything that you see under income statement that affects cash would be reported under operating activities section of cash flow. Anything that you see as revenue, you see as expenses that affects cash would be reported in the first section. Also, anything that relates to current asset or current liability. So if we purchase inventory, using up our cash, the part of cash that we use up reports here. Okay, if we, for example, borrow money, but it's a short-term money, current liability, also reported under operating activities. Okay, so payment of liability reported under operating activities. Any revenues, expenses that we paid off or we received actually by cash, we also reported under this.